Hi, everyone. This is Rob Roy, and welcome to the Elliott Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. Let's get straight to the charts. Over the past couple of weeks, we've been talking about the potential for an ending diagonal. In last week's recording, we showed how we could move up to 590 because we had a couple of the zigzag patterns that were moving to that 590 point where we hit that. So I took the question mark off the screen. We moved back down just a little bit today. And I also mentioned a couple of weeks ago that those Elliott wave purists might pick apart a little bit the potential for this ending diagonal, but you got less ammunition now because each day that's going by, we're moving closer and closer to that fruition of an ending diagonal pattern. And it just happens to play out right around the election. So I think we could have a buy the rumor, sell the news on the election. But regardless, we are in zigzag mania on the S&P, and that's what should happen in an ending diagonal. So we started way back here with the beginning of the ending diagonal and the first zigzag pattern in the end of May. So I'm going to start taking some of these off so it's not so much stuff on your screen. You can see that was a complex C wave in the initial zigzag pattern. That's what's supposed to play out as well. So we went to the 61.8% level. Then we had the complex C wave that moved up to 100%. And then we had this, I didn't draw this one, but that's a zigzag down. You've seen that. Go back and look at the previous recordings if you're viewing us for the first time, and you can see how well this is playing out and how everything we've talked about has come to fruition so far. Then we have this big zigzag pattern here, which has 100% extension, getting up into that 600 level, and it's a complex zigzag here as well. Again, all of this by the book, the way the Elliott wave ending diagonal pattern should play out with all these zigzags. So I'll take this one off. But basically what it looks like is if we complete this pattern, you can see how the two lines here, the upper line and the lower trend lines on this diagonal, some of you people were calling this triangles. And to me, a triangle, symmetrical, ascending or descending. This is more of a pennant pattern in the ending diagonal, in my opinion. But we're now up at 100% plus on the wave 5 extension, and that should bring us right up to the 600 level right around the election. That completes every one of the zigzags. So if we hit 600 on the S&P right around the election, it will be absolutely spot on with the completion of an ending diagonal. And then we'll see what happens. So just if you've been watching us, you know that this is playing out exactly as we've talked about over the past couple of weeks. Again, just go back and watch those previous recordings if you're curious about it. Let's jump to the VIX real quick. We did come back down a bit on the VIX today, where we've been trading around 20, and we moved lower now. We've been in this area, you know, going back all the way at the beginning of the year. We were between 12.5 and 17.5, and then we had Yen Monday, and we came down in the bottom part of the VIX. The support area had been 15. We've been in this range between 15 and 20. We went sideways here around the 20 level. The question was, is that going to become support or resistance? Right now, it's acting as resistance as we're back below 20 and even breaking below the 50-day moving average in today's movement. So a move down to test that support level around 15 would coincide with the S&P going back to the upside or continuing its upward move and completing all of those zigzag patterns. Already a few of them have been completed, as we talked about, but completing all of them as we move into the point of the election right there around the 600 level. Talk about TLT. I know a lot of you like TLT. This is the one thing that's the fly in the ointment for me as far as what's going on in the markets. We are moving up even as we are moving down in prices on bonds. So as prices go down, yields and rates go up. So the fact that rates are moving up, prices are moving down, it's counterintuitive for the market going back to the upside, especially on the Qs. And we'll talk about that when we get there. But we are moving back down here. We do have this wave 4 right at the 61.8% level on TLT. So if prices turn and move back to the upside, that would bring rates down. That's what you would think would happen as the Fed is moving into an easing cycle. Just hasn't played out that way so far. So that would be the one thing that could stop that ending diagonal from showing a correction. I want to be real careful about this because this question came up in our insiders meeting last night for alert subscribers at ewotrader.com is What happens if we get to the election and we don't have a correction? Or are you talking about having a big move to the downside? I just want to be clear. I'm not talking about the end of the world coming here. Even if we do complete that ending diagonal, it's just a corrective pattern. We would move into a correction. That would be the buy the rumor, sell the news on the election, because so many people are used to what happens in a normal election cycle is once you get past the election, you have a rally. I'm just wondering if maybe we're getting the rally out before the election, and then once the election's over, then we go through a correction. But again, I'm not talking about anything of significance to the downside, but we do want to keep an eye on why the bond market isn't really quite in tune with what we're talking about as far as the equities. That'll be the one thing that we're watching over the next couple of weeks as we move into the election. Looking at the dollar, gosh, I was talking about how I didn't want to lose the dollar when we were back down here and seemed to be hanging on by our fingernails. I use that analogy of the fingernails hanging on the edge of a cliff. And man, we've turned around and gone straight up in the dollar. Why is the dollar moving up like that? Well, likely because rates are moving up, and that's supportive of the dollar. Is this indicating some sort of a global recession, perhaps, as what could be the catalyst for a corrective move following the election, that we do get a bit of a recession? The bond market has been calling for one for quite some time, and that would certainly give an answer as to why the dollar is now so strong. We're moving up towards this 104 level. We get to 104, and then I think maybe that could be an area here of resistance on the dollar. We move back to the upside here. But I wanted the dollar to be stronger, not to fall apart, not to do a Katie bar the door, if you will, on the drop below 161.8. We didn't get that. I didn't expect to see this vertical move in the dollar either. So we'll keep an eye on what's going on with the dollar. Make sure this isn't indicating inflation coming back, because the one negative of the dollar getting too strong could be that S word, the stagflation. And I know Jamie Dimon has come out and said that he's concerned about it. Jamie Dimon, we were talking about this as well with some of my trader friends, how he used to be Mr. Positive all the time, and now he seems to be Mr. Negative. He's always coming up with some sort of a negative that could occur in the markets, which is odd as he's getting older, but that's what he's been talking about lately. So as we move into some of the rest of the equity markets, we look at the DIA and just powering to the upside. You can see we are right smack in the middle of this wave 5 forecast on the Elliott wave pattern. That's what we were supposed to do. We had nice consolidation here at 420. We broke to the upside. We're a little bit overbought from the 10-day moving average, but exactly where the Elliott wave algorithm was forecasting the DIA to go. So now we need to see, are we going to move to the upper end of this? You would think so. If the S&P does make it towards that 600 level, you would think the DIA would move up towards that 440 level, but we'll wait and see if that plays out as well. But is this just going along market rotation? That was an argument I was having with some of my trader buddies of if it's just market rotation, or if this is kind of a flight to safety thing, a little bit of a defensive sector play where money is rotating into the Dow with the concern of some sort of a recession coming. And then here's the cues, and that's the zigzag that we've been talking about, where I was saying that with interest rates moving up, I'd be really surprised if we complete it. And I'm a big zigzag fan, if you know that. But if we complete this with rates moving up, that would surprise me. But at this point in time, we are breaking above that A-wave impulse. That was step one that needed to happen. And so we had this triangle. We broke to the upside. We came back and tested it. All the things you've heard me talk about as far as triangle rules are playing out. And now we have another small little triangle here. It's interesting because in reading the works of Elliott, and I've read more than just his published books, I've read his own personal trading notes as well. And he always talked about don't diss the small zigzags or the small triangles. Everybody wants to talk about the big triangles, but don't diss the small ones because they work as well. So if we do break to the upside out of this little triangle, that puts us right about where that C-wave extension would be on the Qs. Boy, that would be a powerful move with an environment with interest rates moving to the upside and the dollar moving higher as well. But we could break to the downside and still fail this zigzag pattern. But for now, it's performing better than I would have expected. And we'll see if it does reach fruition there at the 100% level. The IWM, we talked about that last week. And I mentioned that We had the breakout. We had the one-day breakout when we were doing this recording last week, and I said that means nothing. You have to have a follow-through or confirmation day, and that's what we had. So that was where we were last week. Here's the follow-through confirmation day. So now we're up here at the upper end of this range that we've been in between 205 and 225. Now the question on the IWM, as we sit above this 225 level, is that going to act as support, or are we bumping our heads so hard against this level that we do turn and start to move back to the downside on the IWM? That bears watching as well. But I think if you're a trader of the small caps, at this point in time, you kind of want to just sit on your hands a little bit. Let's see if we can put some distance to the upside of that 225 level and indicate that that could be a new area of support, or if the resistance is going to hold and we start to work our way back down, at least back towards this 50-day moving average, if not all the way back down to the 205 level. I think that would coincide with a correction following the election as well. So lots of stuff to talk about, as you can see. Let's move into the metals. We look at GLD, and we talked about this last week as well. We talked about how we had this false breakout, and then what happens with a triangle, you get the breakout move, and then you come back to the point of the triangle, and that triangles break out one of three ways. They break out and take off, they break out and come back and test the point of the breakout and then continue, or you get a false breakout, the head fake, and then you turn and move back. And that's what occurred with GLD as we continue to move higher. Well, now with gold, we're at the midpoint of the wave 5. And again, you see all of these Elliott wave patterns playing out. And if you haven't done so up till this point, go to hub.com, HUBB.com, get a copy of this software. It has the Elliott wave algorithm programmed exactly as Ralph Nelson Elliott wrote it. And you can get live Elliott wave, and it's free if you get it. Now, there's a premium if you want the AI signals, which we'll talk about another time, but you can get the Elliott wave for free, and it's intraday. All these patterns that we're talking about can be traded intraday. I like to look at a 3-minute chart, live chart during market hours. We look at the end of day charts here for this recording, but everything we talk about can be done intraday if you like more of a day trading type of an atmosphere. But now you can see that GLD has broken out of this triangle after the false breakout. Now we're right in the midpoint of this wave 5 target, just spot on where it should be. So now we see if gold can power higher from here. I'd mentioned that I didn't think the move in gold was done when we went and started forming this triangle. Now we have to see, can we continue from here? And now looking at SLV. SLV is what we've been featuring in our TradeFinder events that we do every Tuesday. We do them Tuesday at 1 p.m. Eastern time, and it's free. You can use the link that you see on your screen now to register. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great community, and they ask great questions. We go through and look at them, and we've had a position on SLV where we thought was going to go to 31, and look where we are on today's move in SLV, right to 31. We're almost to that 100% extension. 31 was on the lower end of it, but big move today on SLV. And we've been chatting here, as you know, on whether or not SLV can play catch up to GLD. They're both moving higher, but you could argue that that's a bigger move in SLV today than what we had moving in GLD. But it's certainly playing catch up. This is what you would expect as the Fed moves into a rate cutting cycle and easing monetary policy, if you will. But gosh, spot on what we were talking about last week with both GLD and SLV, right on the nose. All right, now let's go and take a look at cryptos with Bitcoin. Bitcoin is moving nicely to the upside. We did break above 65,000. We talked about that last week, that we needed to get back above 65,000. We held 60,000, which is the midpoint of this range. If we could get above 65,000, then perhaps we were looking to go up and test 70,000. That looks like what's underway right now. This is live. This is exactly where Bitcoin is at this point in time. So we're moving up in this wave 3. So it certainly looks like we're going to test 70,000. I don't know if we'll do it in the next day or two because we're a little bit overbought from that 10-day moving average. You know the saying, no security in any time frame gets too far away from the 10-day moving average. But it does look like we're going to go up and test 70,000. Then with Ethereum, For those of you that trade Ethereum, we look at Bitcoin and Ethereum a lot because they have ETFs that the average person can trade without opening crypto accounts, etc. And we are holding above the 2,500 level, breaking out of this triangle. And at this point in time, it looks like we are setting up a support level to try to move up and test 3,000 on Ethereum. So holding above that all-important 2,500 level, you can see that we had the positive 1030 cross there. The 10-day moving average is the lime green line crossing above that fuchsia colored line, which is the 30-day moving average. I was taught that years and years ago by floor traders, market makers. They watch the 1030 for indications of new trending. Most people look at the 50-day moving average, which is the royal blue line for trending patterns. But an early indication can be a cross of the 1030. So it looks like we are holding above 2,500, and perhaps we're going to move up to 3,000. Now, last week, one of you posted a comment on this recording. Why look at Ethereum? Why not look at Solana? And I wanted you to know that I do look at every one of your comments. And as a reminder, each and every month this year, we're giving away one of our free level 3 subscriptions from ewotrader.com. That includes our 3 primary strategies: the time strategy, which is a sideways strategy that's income-based. So we're doing calendar spreads, butterflies, iron condors, things like that that generate income. So these aren't big home run type trades. Then volatility strategy is breakouts of triangles. And gosh, just take a look at the chart of SQ. You can see a nice breakout there. That was one that we had in the volatility strategy. Go look at that chart on your own. And then the impulse strategy, which is AI infused, which gives us an AI score of the likelihood of a zigzag occurring within a wave 3. It looks for the strength of the move on the first day of a wave 3. I apply the zigzag patterns to it. And if those both agree, then we send out an alert in the impulse strategy. All 3 of those combined covers pretty much every market condition. It's worth thousands of dollars. And again, all you have to do is post a comment underneath this recording, and you're in this month's drawing. So post a comment, talk about whatever you want as far as the markets. But you ask about Solana, so let's go ahead and bring it up. So let's take a look at the chart of Solana. And the interesting thing here about this chart, and I do agree with this, by the way, I'm no crypto expert, but I do follow some of the cryptos, and one of the ones that I do follow is Solana. So I'm with you on person that posted that comment there. Look at this symmetrical triangle that we have going on in Solana. That means something is getting ready to happen here. Now, you're cautious when you see a triangle. One of Elliott's rules, regardless of what impulse pattern is going on, whether or not it's a zigzag or a 5-wave impulse pattern, if you have a triangle, and you can see there's no 5-wave pattern on Solana right now, there's nothing labeled there. So we are in full-on corrective mode, and that moves right in line with this symmetrical triangle. We're going to break one direction or the other here on Solana. I just can't tell you which way it's going to be, but there's going to be a move of some significance here. Remember, I talked about this in the previous weeks because y'all asked about it. You look for the low of the mouth of the triangle to the high. That gives you the approximate move from the point of the triangle to be looking for. So you can see from 160 down to 130, it's about a 30-point move that's coming in Solana in the not too distant future. Again, I just can't tell you what direction it's going to be. So make sure you post a comment underneath here, and we can hopefully you'll be a winner of that level 3 subscription. Let's take a look at UNG before we get into some other stocks of interest. And boy, we nailed this one last week as well. Go back and look at last week's recording, and you'll see how spot on we were with the things that we were talking about. And we said that we thought we had something going on here, maybe on UNG. We broke 15. Finally, we had a nice move. And for you natural gas fans, we're thinking that maybe we could move up here towards 20. But we had to respect that this was a really well-formed 5-wave, Elliott wave pattern to the downside. And that's what's played out this week. We broke back below 15. We're down here around 12.5. If we can't hold here, which is support from the end of August and early August there at 12.5, then we're most certainly headed down to this wave 5 low here down around 10. We do need to break 12.5, but it certainly looks like that pattern is underway. We are a little bit oversold, so a slight bounce to the upside, and UNG at the beginning of the week wouldn't be unexpected. But we're going to watch and see if we can hold 12.5, or if we break it, then you have a pretty solid bearish trade, I would think, down there to that 10 level. And then if we look at USO, that was the one where I said, you got to show me. We did everything we were supposed to do in USO. We had this symmetrical triangle breakout. We had a triangle and the volatility strategy on USO as well. We caught this breakout move. And then we came back up to the point of the breakout. Again, Elliott wave corrective triangle rules. So you break out, you go back to the point of the breakout and test it. We went right there and we've come back down. Now we're maybe building an ascending triangle here. We'll see. We have this lower trend line of so far higher lows. We're barely holding this lower trend line. But if we kind of churn in here over the next week or two, that would be a pretty strong ascending triangle indicating some sort of a breakout in oil coming, specifically USO. Even though it's an ascending triangle, I harp on this all the time because there's so much misinformation out there on triangles. An ascending triangle does not mean an upside breakout. Any of the triangles, ascending, descending, or symmetrical, can break either direction. So please don't get caught picking a direction on one of these triangles. But if we continue to form this, and we have some work to do, we need oil to bounce in the next week or two and fill in some room here. But it does look like it's potentially setting up for a nice ascending triangle on USO and see where we move from here. So now let's talk about other stocks of interest. NVIDIA, you guys asked about that one last week as well. This is what we were talking about here, where we had moved up to this area of resistance. We came back down, tested the 10-day moving average, and now we're right back up at the upper end of this range here on NVIDIA. It's a pretty large symmetrical triangle, which would suggest that there is more to the upside to go. Even the Elliott wave algorithm still has this wave 3 as green. When it feels like that wave might be over, it turns it purple, like the wave 1 and 2. When it's green, it tells you that the algorithm thinks this wave could still be underway, which means that we are hitting resistance, as you would expect here at 140 because of the highs back in June and July, and a little bit of separation from the 10-day moving average, but perhaps we catch ourselves, break out, and we continue higher in NVIDIA, and that could work well if the S&P does go up and complete that ending diagonal that we've been talking about. MicroStrategy, with what's going on with the cryptos, specifically Bitcoin, you would think this is what would occur. Last week when we were talking about it, we had this big breakout move here. We opened higher, we came back down, but we were too far away from the 10-day moving average on Monday. So we came back down to the 10-day moving average, but sprinted back to the upside today on the upward move on Bitcoin. And as you know, MicroStrategy is heavily leveraged against Bitcoin now. So as Bitcoin goes, pretty much that's how MicroStrategy goes. It's a good way to trade the crypto world as well if you don't want to get into one of those ETFs, but you like the idea of Bitcoin moving higher. Look at MicroStrategy, but big move back to the upside after a just perfect test of the 10-day moving average. And there you go. Got too far away from the 10-day moving average. That rule, no security in any time frame gets too far from the 10-day moving average. Just follow that. It'll be helpful no matter what trading system you look at. So we came back down, had a doji right on the 10-day moving average, and then back to the upside today. And then, of course, the big news today was Netflix that just nailed earnings last night. And look at that move. So we had this wave 5 movement to the upside. There's a zigzag right here as well. So let me just go ahead and draw this zigzag in. And you can see that where the 100% extension is exactly where the big zigzag was that I started way back here in May. And so we have both of these areas giving us a target price right around this area of the midpoint of the wave 5. And now that tap box, the wave 5 tap box, is a little bit higher with this big move to the upside in Netflix today. But Elliott wave called it. It said that we were likely to go higher with these corrective patterns. And Elliott always said that as good as the wave 5 impulse patterns are, the zigzags are even better. And that's why I'm such a big fan of them. Follow along with those and you'll do pretty well. Nothing's 100%. Nothing's right every time. But gosh, these have a great track record. And if you've been following us, you know that we've been pretty spot on a lot of these. Well, now we're getting up into an area now where that 100% extension is not too far away on Netflix. Maybe it needs to calm down. It's a little separated from the 10-day moving average after that big move today. So maybe a little bit of backing and filling next week on Netflix is warranted here. And then if we look at Tesla, we've been talking about Tesla a lot. Some of you are like, why are you talking about Tesla's old news? Well, we broke down from this 50-day moving average, but we're holding right here. And once again, spot on with the rules. Look what happened here. We had this symmetrical triangle right here on Tesla at this point and broke to the upside and then right back down to the point of the triangle. Exactly what's supposed to happen here. So you break out and then you come back down and you test the point of the breakout, and we've just gone dead sideways here on Tesla since we satisfied that rule of coming back to the point of the triangle. So where does Tesla go? Well, that's a little tougher now on Tesla because everything that's supposed to happen has happened. So when you get into that pattern, that's when you go on to pause and you watch and say, okay, you tell us where the next impulse move is going to be. That's where you'd be if you're a trader of Tesla, wait and see mode and see which one of these moves is likely to occur. And then last but not least, we always talk about the INDA. We have lots of viewers and subscribers from India, and we got this one right too. So pretty good week compared to what we were talking about last week, where we said if we could hold 57, maybe we could move back to the upside. But if we didn't hold 57, it could get ugly. We've broken below it. Notice with the big move down yesterday, this does not count as a follow-through day today. So we wouldn't say we're definitely on the way down to 55, but it certainly looks like we have to be careful with that, especially with this bearish 1030 cross here and the break below support at 57 and breaking below the 50-day moving average. We're a little bit oversold from the 10-day moving average, so maybe we're going to trade in here and perhaps come back down towards that 55 area, which should act as support on the INDA. So we're kind of in no man's land on the INDA now, but we did say that if we couldn't bounce off 57, you had to be cautious here, and that certainly turned out to be the right move. Hope you have a great weekend. Thanks for watching. As always, look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.